3,000 by when?
5 years. Always 5 years.
Always 5 years. You recently sold some last week, right?
Yeah.
About $180 million.
I read that it was 130 million. So it got
okay.
much press.
Oh, I'm sorry, 180,000 shares at $130 million, right? Why'd you do that?
So Tesla is still the largest position in our portfolios on that particular day. And I can tell you this because we disclose our holdings every day and we publish our trades every day. On that, I'm always looking for cash, in especially the flagship fund, which is very concentrated and involves all of our technologies. So a company in the automation space, UiPath, was down 11% that day on its earnings release. And Tesla had just gone up 30%. So it was really a tactical move. So just to give you a sense, Tesla is a 10.5% position in the flagship fund. The next highest position is, I think, 5.9%. So the conviction, this was, I will take a trade up 30%, down 10%. That's like a 40% difference. That's all that was.
But this is not a stock, I mean, at least recently, that has been on the move higher. In fact, it's been flat to down.
No, it's actually, if you look at it, it has been levitating. It has. We got into the 500s. It got well below 500, I believe, in the.
But I assume, therefore, but it must have crossed 10% a while ago. Meaning you must have been much higher.
So when a stock moves from 10%, we can no longer buy. And thank you. I want to address this because we keep getting questions about it. We cannot buy a stock if it is 10% or higher in the portfolio. We can sell, of course. We do not have to sell. What we usually do, this is not science, very unpredictable. So, this is, you can't replicate this in terms of trying to figure out what we're going to do. But when a stock gets to 11 or 12% in the portfolio, it means that it has appreciated by 10 to 20% relative to the other positions in the portfolio. And usually what we're doing is being opportunistic and taking advantage of a drop in a stock. Again, need the cash, largest position above 10%.
Okay, let me ask you.
Does that make that?
No, it makes sense. I know there'll be bulls and bears on this. Let me ask you a different question though. And it's really about how to assess and think about some of the comments, projections, and other things that Elon Musk makes about the company, and how you interpret them and how the public interprets them, and frankly, how bears interpret them.
Mm-hmm.
Which is to say that there's a lot of times where Elon will come out and say something, whether it be about robo-taxis or when there'll be full autonomous driving or all sorts of things that I imagine at some point, because we've had these conversations in the past, do get baked in or should be getting baked in to some kind of assessment of the stock.
Mm-hmm.
And as optimistic as you can very well be about all of those things, they haven't come true. And so how do you grapple with that?
This is one of the hardest problems that we are going to solve technologically. So actually in the last 3 months, we have increased our projection for autonomous taxi networks. Now in the $3,000 base case, we assign a 50% probability to autonomous. So it's a really hard problem. But if anyone is going to solve it, our confidence that Tesla is that company has gone up dramatically as we've looked.
But I guess when I ask it, when Elon says that robo-taxis by the end of 2020, when you project, what numbers would you therefore have put in 2019 when he said that, or 18 when he was saying that?
Again, 5-year.
I know.
Our probability last year whenever he said that was lower. I think we had a 25% probability.
So do you discount what he says by what number? That's
Elon, if you really look at what he's doing at SpaceX and at Tesla, he's changing our world.
Oh,
right.
You're not going to get me to disagree with that. I think it's simply about the valuation and how investors should think about these
He
numbers.
was the first person when we were talking about autonomous taxi networks, he said that the last mile is going to be so hard. I'm not sure it can be done. This was about 5 years ago, maybe longer. The resources that he's putting into this program and the talent that he's attracting and the advancements that he's making and that are possible now that artificial intelligence training costs are dropping by 68% per year. We think the probability of autonomous is going up.
I don't disagree, but does it frustrate you?
No, he's a visionary, and he sees the future so clearly.
Right.
The fact that he changed from saying last mile, I don't think that's good. There'll have to be some combination system. He changed from that with his partner, Andrej Karpathy, who is one of the most brilliant artificial intelligence engineers. I think this is going to happen in the next few years. He is always a year or 2 or 3 too early. We adjust for that in our forecasts.
What do you think about the prospect that one of...
Oh, and by the way, may I say one other thing? One of the reasons Elon does that is he wants to get the supply chain in motion. And when the supply chain does not cooperate, he brings it in. He's becoming much more vertically integrated. So auto suppliers and technology companies know that if they don't march to his drum and at his cadence instead of these 4 to 5 year design cycles, they're going to lose the business.
A lot of short sellers have lost a lot of money betting against Elon, as you know. And one of the things that a lot of short sellers will tell you that they missed was not actually the technology or anything else per se, but was the scale and ability to go back to the market over and over again to get more and more capital. That the scale of the capital unto itself that could become almost a self-fulfilling prophecy if there were people out there willing to impart their capital to you over and over again. How much of that is in your thesis?
Well, the way we would frame that is we believed that Tesla had 4 barriers to entry, and all but 1 have increased in the last few years. So they have the artificial intelligence chip. They have the best battery technology, costs lower and will be lower for the next 3 to 5 years. They have the most data to do the training and find corner cases. And then the last one, which I would have thought they would have lost already, is over-the-air software updates. I haven't had to take my Model 3 in since 2018. They have the best cars on the road.